Good afternoon. We'd like to extend a warm welcome to all of the Payments Canada Summit participants who are attending our breakout session today, which is hosted by Worldpay from FIS, but featuring Visa Canada. And before I introduce Gord Jamieson from Visa, as well as Jeremy Bellino from Worldpay from FIS, I'd just like to go over a few slides first, if that works for everybody. But first, let's talk about COVID. And as you know, 2020 was a really unprecedented year in the history of the globe. Many payments ecosystems, quite frankly, had to shift overnight, and they had to shift overnight to meet that growing demand of consumers and the new ways in which they wanted to pay for their goods and services. And many businesses, quite frankly, started to open up their first e-commerce site to ensure they could garner some additional revenue. But at the same time, once this was opened up this also opened up, if I may, to merchants as well as consumers, opportunistic fraudsters who were really preying on the vulnerabilities of the newly established e-commerce channels. So today, in terms of our particular panel, what we're going to focus on are some of the key stakeholders, and in particular, how these key stakeholders are managing these new trends. We'll really focus on payment risk as well as the ability to mitigate fraud. So with no further ado, I'd like to introduce Gord and Jeremy. First of all, Gord Jamieson. Gord is a senior business leader at Visa and is responsible for Canada Risk. His goal is to differentiate Visa from its competitors, reduce risk of regulatory impact, and support core growth by engaging Canadian clients to minimize payment risk. Prior to joining Visa, Gord served as a member of the Royal Canadian Mounted Police for 20 years. Gord has over 9 years of experience investigating organized crime and has been involved with the forged credit card manufacturing and distribution aspects. Gord is recognized by the Canadian courts as an expert in the field of investigation. In 2002, Gord graduated from Utica College of Syracuse University with his Master's of Science degree in Economic Crime Management. Gord has held positions as both the President and Vice President of the Central Canada Chapter of the International Association of Financial Crimes Investigators and has been on the International Board of Advisors. Next, my pleasure to introduce Jeremy Bellino. Jeremy is a Senior Product Manager at Worldpay from FIS, managing payments, fraud, and authentication products and services for its North American platforms. As a veteran fintech consultant with over 10 years of experience in the e-commerce space, Jeremy has been hyper-focused on providing merchants the means to mitigate payments fraud and optimize the consumer experience. And my name is Phil Hogg, and I am the head of business development in Canada for the Global Enterprise e-commerce group at Worldpay for FIS. I have over 30 years of experience in the payments, in the technology, as well as the telecommunications sector. From a payments perspective, I have had opportunities to work in executive roles at companies such as Monera Solutions, as well as Everlink Payment Services. And I started my career for the first decade as a director of payment system strategy with the Canadian Bankers Association, where I got to know Payments Canada, and at that point known as Canadian Payments Association, very well. So I'm really excited to be here as part of the Payments Canada Summit. So again, thank you very much to all of our participants on the panel, and we look forward to our conversation. Next, though, again, just talking about COVID has fundamentally altered every facet of modern life within Canada. What was the normal at one point is no longer. And quite frankly, I think most of us would share the view that seems to be years and years behind us. And now, as a result, simply put, we've established a new normal that is emerging from the disruption of the pandemic. And from a Worldpay from FIS perspective, one of the key papers that we had established last year was we worked on a survey, and we surveyed over 1,000 Canadians because, quite frankly, we wanted to get their views and their behavioral changes associated with how COVID was impacting their lives. And particularly for obvious reasons, we tended to focus on a little bit more to do with payments. So there are three key attributes associated with our findings. Number one was acceleration. So prior to 2020, there certainly was a momentum of trends already associated with digital payments around the world. However, with COVID, effectively what COVID did was it lassoed the future, and it pulled the future into the present. And it made those changes rather dramatic and rather quick. So as a result, based on those changes and based on that lassoing of the future, it really demanded an urgent call for digital transformation. The second issue that we discovered was adoption. The one thing about Canadians, as we all realize, is we're a pretty hardy bunch and pretty resilient, I would suggest. So as a result, with this jarring disruption, we adapted and we found the new products and services in which we could pay for our goods and services. So whether that was through contactless, whether that was online or whatever the case may be, and again, we did adapt and we will continue to adapt. And finally is persistence. We believe at Worldpay from FIS that these changes are not something that is a fly-by-night and will go away quickly. We believe that these changes are going to be permanent, and thus they will continue to persist as we go through the future. With regards to that particular survey, and understanding that this is a bit of an eye chart, and we'll try and distill it down very quickly for you. But here's a few of the statistics based on the survey of the 1,000 Canadians that we found. Number one, that 58% of Canadians are spending more online. Again, not much of a surprise in that particular regard. Another fascinating element associated with the study was that 42% made more purchases through their mobile devices. And certainly from a Worldpay from FIS perspective, we have also been certainly betting the fact that within the next couple of years, you're going to have a significant majority of payments being initiated through a mobile device than traditional laptop devices. Number three, on the far right-hand side, the second, talks about how 53% were certainly ordering more restaurant and takeout, curbside pickup, and the like. And the final stat I'd like to share with you today is that 32% of Canadians reported buying things they didn't really need, but they just wanted to try and stay sane during the lockdown. And I probably would fit into that particular category as well. But next, not only do we take a look at the concept associated with COVID, but and the fact that once we get out of the third wave, where will we be? We believe that this is an accelerated and a continued accelerated growth within the Canadian context, certainly going through to 2024. On the far right-hand side, you'll see a copy of our most recent Global Payments Report. This is a report that we issue on a yearly basis. And what it does, it looks at trends, challenges associated with payments around the world, but it also provides a forecast, if you will. So it looks at regions such as North America, LATAM, EMEA, and APAC, but also this year it analyzed 41 specific companies. And again, taking a look at the trends that they exhibited over the past year, as well as it provides a forecast for the next few years. So if we look at Canada specifically, and while some of our guests, such as Jeremy and Gord, will talk about, again, some of the increases that they have seen with regards to some of these particular statistics on online payments and the like, really, I think for this slide, we should focus on the Worldpay forecast. So the bottom two numbers below. So what does that forecast show? Number one, so it shows a year-over-year growth within the sales from e-com of 14%. Also, more mind-boggling is the fact that it shows up until the year 2024, a year-over-year growth associated with sales from m-com or mobile commerce being 29%. And then finally, with regards to, I certainly hope we're not studying you out for this particular session at this juncture, but also one final study that we have established, and this was Jeremy is going to be talking about this during his particular session. But we did have we commissioned a study by Forrester Research to survey corporations from around the world with regards to payment risk as well as risk mitigation factors. And what they found was, for example, 9 in 10 merchants felt that they lost revenue due to payments fraud. 38% of those particular merchants thought they lost at least 6% or more of their revenue. And finally, more than 55% felt that they had higher levels of chargebacks. But enough of simple statistics, if you will, that are brought to bear through some surveys. I'd really like to focus now with our panel and get right into it and go from there. So first of all, Gord and Jeremy, again, thank you so much. We greatly appreciate and value your time with us here today. And I think for the purposes of this session, we're going to focus on three segmentations in terms of discussion. Number one is, let's address some numbers first. We've seen some of the numbers from a Worldpay from FIS perspective. I'd like to see some views from especially our good friends from Visa and Visa Canada. So let's talk about the payment trends over the past year. Let's talk about the nature of the fraud problem and what our merchant customers are experiencing. Then we're next going to focus on types of fraud. What are the types of fraud that are occurring? And if we can address some of the frequency associated with those elements of fraud. And then finally, after we understand the numbers and the types of fraud, let's shift our discussion and let's talk about ways in which the merchant can fight back against the threat actors within this environment through the use of enhanced technologies as well as processes to move from there. So first, I'd like to turn it over to Gord. And again, Gord, thanks so much for being part of our session today. But given the fact that you're with Visa, can you? I've presented a number of types of statistics here a bit earlier, but from a Visa perspective, would you mind sharing with us what Visa has seen from the growth of online payments, if you will, as well, and appreciating the fact that this is not a card-present discussion that we have today. It would be interesting if we could sort of understand a little bit of some of the corresponding decreases in card-present volumes as well. So Gord, I'd love to turn it over to you. Thanks so much.
Sure. Thanks, Phil. Payment volumes in digital transactions have consistently increased since the lockdown began in March of 2020, with volumes starting to stabilize over this last year. Global card not present volumes, excluding travel, and travel is a big component that we know has been heavily hit by the industry, has averaged about 30% growth that we've seen across multiple countries, including the US and Canada. And when we look further at it, and that's despite the fact that card not present volume obviously is dwindling with the lockdowns that are in place, but travel's still down at about 80% right now as compared to 2019. So it's having a huge impact on our business, and we're seeing the shift towards that digital space overall volume-wise.
Great, thank you so much for that, Gord. So if you do take a look at, again, so significant growth. Now, if you can talk a little bit about fraud and fraud with regards to online payments, what are you seeing from a Visa perspective?
Yes, the sprint to digitizing everybody's consumer interactions and experiences. Everyone feels merchants that were shut out or locked out had to move to the online channel, along with volatile spending patterns and the emergence of highly motivated and creative fraud rings out there. There was an expectation for a significant increase in fraud. And while there were spikes, especially in that first quarter, as we come into the lockdown, that April, May, and June period, we saw spikes. We saw spikes in Canada, we saw spikes globally, but we think that a lot of it is a shift in behavior on the consumer's point of view, and issuers having to adjust their systems, their fraud detection systems, to be able to manage this. And our data shows that the overall global fraud rate in the calendar year of 2020 actually decreased while the payment volumes remained relatively flat. This reduction in fraud is partly due, as I mentioned, to the fraud management and the transition to digital-first channels as we adopt more secure technologies, whether it's tokenization or 3DS, or we saw growth in contactless payments in our Canadian market as well too. But another factor is the transaction mix shifting significantly towards domestic. Our borders being closed for almost this entire time for the most part, we're seeing a shift towards the domestic. And this plays a major role in fraud reduction because domestic transactions normally have a lower fraud rate associated with them as opposed to cross-border transactions. So had we maintained the same traditional mix of domestic versus cross-border, we probably would have seen a 4% increase over the past year, which we didn't see. And then I guess the thing that is probably most concerning is what happens when the borders open up again and life returns to normal and our cross-border spend starts to rebound. Do we, with the presence of these enhanced threat vectors and the threats to security around the payment transactions, are we going to see an increase in our fraud rate? That's yet to be determined, and how quickly the issuers will adjust with their rules and the risk management processes. But that's something that you just have to put out there as we have to be prepared for.
So, Gord, as you mentioned about once we open the borders and what that will do relative to cross-border fraud, if you had a crystal ball as well, are there any other significant trends that you see that might impact fraud as well, going down the post the third wave, and hopefully we enter that new normal?
Right, right. Fraud attacks, they became more frequent once the world retreated to lockdowns. And not only did the consumers retreat to the digital space, so did the fraudsters. And they've been there for some time, but they're completely focused on that right now. And they're targeting every phase of the transaction lifecycle, whether it's the onboarding, the authentication, the authorization, dispute optimization, all aspects of it. Impersonation attacks are very popular during the whole COVID situation, taking advantage of the virtual nature of everybody working from home or working remotely. Consumers are constantly being phished with phishing emails or phone calls. I think the fact that you're sitting at home now all the time and that phone rings, you probably weren't there before, but that phone rings and someone telling me they're from the Visa or MasterCard or from some other financial agency, and they saw a suspicious transaction on your card. They're trying to get as much information or personal information out of the consumers. And they've gotten very sophisticated in the way they do it. They do their research beforehand. They have a lot of information about the consumer in some cases, or they attempt to disguise where they're coming from, making the call ID look like it's coming from Visa or some other location. We're also seeing an intensified effort from a cyber perspective on different aspects. One being e-skimming, a process where hackers will inject malicious JavaScript and code into a website, trying to harvest customer information while you transact on real time. Account testing and enumeration attacks. Account testing is where they do one or two low dollar transactions at a merchant site, or enumeration attacks is where they're trying to brute force. And we're seeing a lot of that happening right now in North America, especially where these attacks are happening. And what they do is they made 10,000 transactions through a single merchant on a given night. And that merchant maybe only processes 100 transactions a month normally. So it really stands out as being something unusual. And even if they only get approval on 5 or 10%, they now have a large quantity of cards in which they can sell on the Carter forums and other venues as a way to perpetrate fraud. And then lastly, we see ransomware as another area that's sort of popped its ugly head up through this space. And we see some estimates out there that victim organization on average experience a total cost of over $200 million, have had more than 12,000 devices destroyed in ransomware attacks. So it's the cyber criminals are out there that are really taking advantage of this virtual way that we're connecting today.
Great, thanks for that, Gordon. Look forward to talking about ways in which merchants can protect themselves as well later on in the discussion. But now let's switch it over to Jeremy, and a hearty Canadian welcome to Jeremy, who's out of our New Hampshire office. So pleasure, Jeremy, and thank you again for joining us today. Jeremy, during the introduction, I talked about how Worldpay from FIS has established a study, a survey, if you will, through Forrester Research to effectively get the attitudes of various corporates around the world with regards to payment risk and fraud mitigation. Could you just give us a little bit of, the makeup associated with that particular survey? Who was involved with it, some of the results, what the merchants were seeing from their perspective terms of increase in fraud and maybe what the impacts in revenues were, et cetera. That would be really helpful for us. Thank you.
Yeah, absolutely. And thanks, Phil, for that introduction. And thank you, everybody, for spending the time with us here today. Yeah, so we really wanted to conduct this survey. So it's titled the Global Payment Risk Mitigation Survey. And what we were really trying to figure out was, how did e-commerce and card-present fraud, how did that impact merchants during the COVID-19 pandemic, as it once was in 2020 and as it still continues to progress throughout 2021? We also wanted to know not only how did it impact, but we also wanted to ask, what are merchants doing to actually go through and combat these new scenarios and new situations of fraud and fraudulent behavior that's really coming through the door? Because I think Gord made a really good point, and you did too, Phil, as well, is that a lot of merchants during the COVID-19 pandemic, they were really put together really with a choice, right? In terms of that, if they wanted to continue doing business, they had to make sure that they had to get a web page set up. They had to get a website and be able to accept payments online as quickly as possible, especially in the wake of a lot of lockdowns and closures of different businesses. And so what happened was that these customers, these merchants who were struggling and really trying to rapidly set up that business page, it left them susceptible to these new advanced fraudsters who were starting to come through the door. They were able to take advantage of this really rapid shift in consumer behavior and merchant behavior as well, to really get through the door and start to take advantage of some of these customers who just really needed to get a web page set up as quickly as possible. And so as part of this study, we conducted it back in December of 2020. So it's fairly recent data that we're able to really extrapolate on and provide some insight as well. And so what we did is that we surveyed more than 650 respondents from merchants across the globe. So we had respondents in North America, in Europe, in our APAC region, as well as Latin America, with about a little over 8% of our respondents coming from the Canadian region as well. And so of these respondents, we're really trying to focus and target on those decision makers within the organization who were focused on risk mitigation, fraud mitigation, so on and so forth. And so what we also wanted to do is not only sort of capture this global picture in terms of how has fraud impacted merchants and what are merchants doing to combat it, but we also wanted to get a full picture, in terms of the different industries and verticals in which we're speaking to. So we were able to get information and, from respondents across the digital content space, the online gambling and gaming space, those who are in transportation, the financial services. We also tackled online retail. And then, of course, last but not least is the omni-channel perspective. Because I think the really important thing to note as well is that with all these shifts and changes and bad actor and fraudulent behavior, what you're seeing at one particular vertical in terms of fraud is going to look different versus the other vertical, right? So when you're in a retail space, what you tend to see quite often is things like returns fraud or, sort of account takeover, sort of that malicious fraud, even potentially friendly fraud. Whereas when you're in the gambling gaming space, you're going to see a little bit of a different behavior, different sort of pattern in terms of the different fraudsters that are ultimately coming through the door as well. And so when we looked at the survey and we looked at all the results, they were fairly striking in terms of being able to confirm a lot of our assumptions. First and foremost was that, I think needless to say, that overall payments fraud and awareness of payments fraud increased pretty significantly in 2020 when you compare that to 2019. One of the other things that I pulled out of the survey as well is that we actually saw that those merchants who were based in regions outside of Europe also started to see an even higher increase in fraud versus their European counterparts. And I think part of that is really due, in fact, to the PSC2 mandate that has been in effect over in the EEA now since September of last year. And then as we continue to really move along with that mandate, with the UK now coming in for September of this year, I think what that's really speaks to, especially from the survey, is that, fraudsters in the European region, it's a lot more difficult for them to penetrate the e-commerce card not present space, simply because there is a mandate now for electronic transactions to be carried out with strong customer authentication, or i.e. 3D secure, in order for that transaction to be compliant. And so what happened is that a lot of fraudsters in the European region started to look elsewhere and say, well, where else can I get in? Where else can I get past the mandate for authentication? And actually, they turned their attention to unregulated regions such as the United States. And then some of the really interesting results that we did pull out of that, and just a few things that I did want to call out, is that Phil, you made a point to this earlier as well, is that when we ask merchants, what is the overall financial impact of payments fraud? 9 out of 10 merchants said that they experienced revenue loss associated with that payments fraud. And to your point as well, 38% of those respondents lost more than 6% of total revenue. So not only was it an issue of having to deal and combat with fraudsters and trying to prevent them from coming through the door, but now there's also the after the fact impact of the financial aspect of it as well. So now this was impacting the merchant's bottom line. And then what we also saw as well is that of our merchants surveyed, we asked, what does this increase in fraud, do you think this has impacts and concerns amongst your consumers? And 85% of our respondents said that yes, they believe that their their heightened awareness of this increase in fraudulent activity is causing more and more concerns amongst the cardholder/consumer base. And so I think it's really important to call out. And I think what's really telling about that is not only now as a merchant do you have to try and combat and keep those bad actors out of your environment, but you also have to now somehow reassure your cardholders that we're going to keep your data safe when it's in our environment as you're shopping with our business. And then one other piece I wanted to call out as well is that when we ask these merchants, what are you doing today to combat fraud? And we really ask, are you using solutions today that incorporate authentication, analytics, chargeback management, dispute management, tokenization, as well as real-time fraudulent risk mitigation tools? Only 25% of our respondents said that they are using a combination of all 5 of those particular elements. And so what we're seeing is that merchants are really kind of taking that pick and choose approach to fraud mitigation and trying to wedge that in where they think it makes sense from a fraud mitigation perspective, as well as just the overall operational overhead that it costs for any given merchant to really have to manage all 5 of these different types of solutions, all in the same vein to try and mitigate fraud. So I think it's really striking to see that, there's a really good chunk of merchants out there that aren't taking advantage of all the tools, solutions, and services that are out there today to try and mitigate fraud, not only at the time of authorization, but also to make sure that they can take care of it after the fact as well.
Great, Jeremy, thanks so much. Also, when it comes to revenue and revenue loss, everybody sort of looks at the fact that, it's a chargeback and they only think about the chargeback. And just in the interest of time, I wonder if you could sort of briefly let us know what the overall impact is relative to the cost associated with a fraudulent transaction.
Yeah, absolutely. So every year, a company called LexisNexis, they perform a study where they try to figure out what is the true cost of fraud to the end merchant. And so in 2020, what they found is that for every $1 of fraud experienced by the merchant, the ultimate cost to that merchant is about $3.36. So when you take a step back, what that really means is that for a $100 transaction that comes, later gets raised as a fraud chargeback, the merchant is ultimately on the hook for about $336. So on top of the value of the transaction itself, you also have things like product and inventory loss. So now if you're shipping out a product, cardholder has it, they raise a chargeback, now you're out the transaction, you're also out the product itself. Then you also have to take into account the fees associated with responding to a chargeback. Depending on who you use as a payments acquirer, as a payments gateway, PSP, there's going to be a fee associated with every chargeback that comes through the door. And the more and more chargebacks you start to accumulate, the higher those fees will ultimately come up to at the end of the month when you receive your invoice. And then on top of that as well, you also have the card scheme interchange that's being charged to you by the networks in order for you to actually go ahead and accept those credit card payments online. And so for transactions that get through the door and later get raised as fraudulent or as a fraudulent chargeback, you as a merchant are also on the hook for paying for that interchange as well. And while that it's not as significant compared to product or the transaction value loss, those fees will start to accumulate and grow over time. And then lastly, too, there's also the operational, really the soft costs associated with having a team behind the scenes, having to work those chargebacks on a daily basis, going through answering RFIs, responding to first chargebacks, potentially going through the arbitration process. So there's a lot of costs really associated with the overall chargeback, just beyond the value of the chargeback itself.
Great, thanks for that. Okay, folks, it's now time to shift gears for a second. We had chatted about, the various numbers, if you will, and some various studies. However, I think it's now time to take a look at what types of fraud are being employed by the threat actors. And again, given the time associated with the session today, if you could, this might be a little bit more of a rapid fire, but Bottom line is, first, let's start off with Gord. Gord, what we're going to do is, why don't we take a look at the life cycle associated with the transaction, and to understand the types of fraud that are initiated. And the very first part of the life cycle, if you will, is obviously when somebody applies for a credit card and the like. So what are you seeing relative to onboarding and the management, or the account onboarding and management associated with fraud and fraud techniques?
Well, verifying consumer identity has become a major challenge during the pandemic, with a lot of businesses closed up or stay-at-home orders, as we're currently under here in Ontario. It's challenging. It creates opportunities to engage in application fraud or synthetic IDs, and there's also pressure on the acquiring model today for that rapid onboarding as well too. So it puts pressures on your validation of an individual, and when you're trying to board that particular merchant. The pandemic-led acceleration of digital behavior and the increasing in sophistication of our fraudsters targeting these vulnerabilities has resulted in firms feeling unprepared in a lot of cases to deal with the challenges of a rapidly evolving security landscape. There was a Forrester study that we did at Visa as well that showed that only 35% of firms feel prepared to keep up or stay ahead of emerging risks, and despite 74% of the firms believing that it's critically important and should be a priority.
Excellent. Great. Thank you. Now, with regards to the next element associated with the life cycle, that would be authentication. And Jeremy, I'd like to pose that over to you. If you could talk about authentication. I know a bit earlier today, Gord had talked about impersonation attacks and the like. But yeah, let's turn it over to you for authentication. What sort of attacks are we finding?
Yeah, I think Gord made a really good point about how it's been really difficult now to validate the identity of any given customer in this really exclusively virtual environment. We're seeing that persist throughout the payments lifecycle as well, specifically in areas where things like phishing attacks or social engineering start to come through the door. And for those who aren't very fully aware of what that is, ultimately, it's a scenario where what looks like a legitimate business is asking you to, provide personally identifiable information, whether it's your, birth date, other identifying information, or even your card details, to proceed with making a transaction. And so what we're seeing on the Worldpay side quite a bit is that, especially in the sort of the utilities and the services industry, we're starting to see a lot of phishing attacks where a seemingly legitimate email will come through the door saying your bill is now overdue. You as a consumer now have to pay. You go through, you enter your card details, or maybe it's your bank account information, and now that information is with a fraudster. So now our company merchants are dealing with additional chargebacks associated with that. And then you also take on top of that the social engineering aspect of it too. I think it's much easier now for any given person to impersonate somebody that maybe the end consumer does know or has knowledge of in a previous sort of scenario or previous life. And it's a lot easier to try and get through the door and manipulate that person in that particular scenario, where they're able to take advantage of the fact that it's difficult, that you can't see somebody face to face.
Great. Thanks for that, Jeremy. So the next level in the life cycle is the authorization stage. So Gord, what's Visa seeing at the authorization stage?
So I touched on it just briefly earlier, but throughout the second half of 2020, it's account enumeration, which is really a scalable and automated testing of common payment fields via the e-commerce transaction, and effectively trying to guess your account number, your CVV2, expiry date, and it's remaining to be a leading threat to the payment ecosystem today, as we're seeing. In the fourth quarter of 2020, the number of enumerated accounts identified globally was up 23%. And the number of enumerated transactions attempted was up 73%. All of this together is having a huge impact on the ecosystem. When we're seeing these attacks themselves having significant operational costs, both to the issuer and to the merchants. It's not just a few hundreds, it's millions of transactions that are being tested on a daily basis. So it's having a huge impact on the ecosystem.
Incredible. And finally up, the last element associated with the life cycle, if you will, is dispute resolution, chargebacks and the like. And Jeremy, in this particular area, there's often talk of friendly fraud, which doesn't seem terribly friendly to me. However, nonetheless, if you could share with us what your thoughts are on dispute resolution and fraud techniques.
Yeah, absolutely. And friendly fraud was and continues to be really a primary source of heartache and fraud issues for merchants out really on a global scale as well. So friendly fraud at a very high level, it's essentially a scenario where a cardholder or customer will go ahead and file a chargeback with their bank instead of first trying to obtain a refund from the merchant. Reason for that is, as a cardholder, it's very easy now for you to call up your bank or log into the mobile application and say, I don't recognize this transaction. Bank, I need a refund because this wasn't me. It's usually a two-step process, very simple. In scenarios where there's suspicion of fraud, the bank is very likely to side with the cardholder simply because they want to make sure that their cardholder receives the best consumer experience as well. And so friendly fraud is, again, really difficult not only to identify, but also to combat as well. A lot of cases, especially when you look at the pandemic, right? Anybody in the audience, Dave, that has any children, during the lockdowns when they couldn't go to school, couldn't do any sort of after school activities, they were forced to also move online. And as part of that, if they're interested, let's say, for example, gaming or watching live streams and things of the like, they're going to somehow get your card number and try to make a transaction and purchase that game or watch that game or online. And what happens is, as the parent, they'll log on and see their statement and say, well, hey, I didn't spend $50 on Twitch or at Roblox, for example. So now they'll go to their bank and say, hey, this wasn't me. And now, of course, they, even though that is a legitimate charge because it was the child who was making that transaction, the parent is still on the hook to actually, go ahead and make that whole. And so trying to combat friendly fraud, not only do we have to look at these cases where it's, almost innocent in terms of, the types of fraud coming through the door, oftentimes this can actually turn into more hostile friendly fraud. So somebody who goes through the chargeback process and says, hey, I got a refund really quickly, I'm going to keep doing this until I get caught. So somebody who's only doing this once now is figuring out that it's a lot easier for them to get their money back on a legitimate charge by just simply going to their bank. And so being able to, not only effectively identify friendly fraud, but also having the wherewithal and the means to actually respond and sort of, take action against these types of transactions coming through the door with sufficient documentation, supporting documentation, and sufficient information to say this is a legitimate charge becomes very, very important for merchants, especially when it comes to trying and combating friendly fraud.
Great. Thanks for that, Jeremy, and yourself as well, Gord. Again, we're now approaching the runway, if you will, and we've talked about the numbers. We've talked about the different types of fraud. Now let's focus on ways in which secure technology adoption can assist many of the stakeholders who are watching this today, assist them with regards to combating and mitigating fraud, if you will. Gord, I want to turn it over to you. I know you had indicated at the beginning of the session the fraud levels that Visa has seen, and one of the items that you had mentioned is that they weren't as high as one would expect because your members, your issuers, have employed a number of techniques, if you will, to mitigate that fraud. Can you chat a little bit further about that, please?
Right, sure. Given the dramatic shift in payments dynamics, our clients have accelerated their adoption of secure technologies across all channels, card present, card not present. In the card present space, we're seeing chip and contactless continue to grow. Globally, chip and chip penetration is about 83%. But the rise in contact has been significant, especially during the pandemic. And that's not just coming from our issuers, it's the consumers and the merchants asking for more and more opportunity because the demand was there for touchless type of transactions. Globally, we saw a 38% increase in contactless adoption and an 11% decrease in contactless fraud rates. In Canada, in April, we increased what we call the limit or the Visa Easy Payment limit to $250. And we saw a significant increase in contactless payments as a percentage of our volume. It now represents 78% of our point of sale transactions today. Consumers are embracing it, merchants are embracing it. And I think it's here to stay. That's something that we're not going to revert back to as people get accustomed to tapping and then walking away from the register. Mobile wallets, global mobile wallets, as a contactless form have gained significant traction. And globally, we observed an increase in mobile contactless adoption and a decrease in fraud associated during the pandemic. When we look at the card not present channel, tokenization is increased. With a Visa token service, card details can be replaced with a unique digital identifier used to process the transaction without exposing the sensitive cardholder information and thus protecting that merchant during the transaction lifecycle. For those Visa tokens issued around the world, we can push out dynamic updates on lost, stolen, expired credentials, enable a frictionless merchant experience and customer experience. Globally, adoption has grown significant during the pandemic, and Visa has now issued over 2 billion tokens globally. With this increase in token adoption, we have seen more than a 25% reduction in fraud for Visa tokens compared to PAN-based risk transactions. And the other main arsenal in our toolkit when it comes to card not present is dealing with 3D Secure or Visa Secure. And we've just, in this last year, more emphasis being placed on the latest standard, EMV 3DS or 3DS 2.0. And we're seeing a huge increase in global migration. In some markets, it's being driven by regulatory pressures to drive adoption. In others, it's just the merchants are seeing the benefit of it. I'm having more and more retailers call me now as the shift in dynamics and shift in consumer spend to the card not present channel. Merchants are basically looking at ways to further protect themselves. And so we've seen globally, 3DS has grown 15% year over year, resulted in a 15% decrease in 3DS related fraud. But overall, when I look at this, enhancing the transaction level security with existing and secure technologies has played a critical role in protecting the ecosystem. But the ecosystems, as we start to adopt some of these technologies, the fraudsters are seeking out other opportunities to basically breach the ecosystem. And namely, that's the consumer. What's the weakest link in the ecosystem today? And it's that consumer. So they're going after that consumer, as we mentioned earlier, with social engineering attacks, trying to basically the phone call that I receive every week, trying to get information out of me, phishing attacks, explosion of compromised login credentials. So going to a business and basically clicking on an email, and now you've introduced malware into your system, and they try to get login credentials there, or account takeover incidents. That is the weakest link right now as you secure the environment where the fraudsters are going after. So it's imperative for us to focus on security, given the acceleration of digital adoption across consumers, financial institutions, and merchants. We just don't leave it right there with one of the stakeholders.
Yeah, perfect. That's incredible, that statistic you mentioned about the 78% increase in contactless payments. And I've got to confess, I'm probably one of those people myself who have taken advantage. And I know a lot of Canadians clearly thanked Visa for doing that, quite frankly, especially during that pandemic. It was a very noble thing to do. Jeremy, in terms of, Gord had touched upon 3DS and in particular 3DS 2. So could you maybe just chat a little bit about the new version 2, or otherwise known as 3DS 2, and also why it's creating, if you will, maybe some reduced friction? Because when 3DS first came into being in the late 90s, there tended to be a little bit more friction for that consumer experience. With 3DS 2, not so much. So if you could chat a little bit about that, as well as, if you wouldn't mind, just touching base on the need for a great communication strategy with one's consumers. Thank you.
Yeah, absolutely. And so going back to the study that we conducted with Forrester, we asked merchants, are you using 3D Secure today? And of our respondents, 82% respondents said, yes, we are using 3DS2 today in some way, shape, or form. And what was really interesting is that wasn't just solely isolated to respondents in Europe. That was merchants in Canada, North America, Europe, Latin America, so on and so forth. And I think what we've really seen is that since EMV 3DS, i.e. 3DS2, has been launched, 5 years ago now, significant increases have been made, especially related to the way in which a challenge page is ultimately displayed to the cardholder. I think when you look back on its predecessor, 3DS version 1, when it was first introduced, to your point, Phil, in 1999, the concept of having a supercomputer in your pocket wasn't exactly on the forefront of everybody's mind in 1999. And so what that meant was that 3DS version 1 really only designed and optimized for the traditional web-based sort of web browser environment, right? So if you're trying to make a transaction with your phone and you're on a mobile website, when you receive a challenge page from your issuing bank as part of the 3DS1 call, that page is going to be rendered really, really poorly on your small screen. Not only that, but 3DS1 is also not compatible with the mobile application environment either. So as more and more businesses start to implement, sort of different loyalty programs and different ways in which to drive, really try to drive an increased customer loyalty and overall customer lifetime value, they're moving towards this mobile application scenario where it makes make purchases and makes, tracking loyalty points a lot easier for any given consumer. And so if you want to confirm and perform authentication in that environment, 3DS1 is not compatible. And so that's where we're starting to see the increase of interest, to Gord's point, in 3DS version 2, and that's universal across the globe. So with 3DS2, it's really designed with the mobile commerce environment in mind. So not only is it optimized for the mobile environment, so that now when you are going through an authentication with 3DS2, there's a process behind the scenes called device data collection. And what that's doing is that it's collecting more than 100 data points related to the device in the environment that the cardholder is in as they're making that transaction. So now as an issuing bank, if you see that an authentication request is being made from a consumer who's on a mobile device, you now know that when you have to go and render that challenge page to the cardholder, you're going to do so in a way in which it looks and fits perfectly on that screen that the cardholder is using. And so some of the ways in which 3DS2 has really tried to facilitate that frictionless, seamless checkout experiences is number one, through the ways in which you can be presented with a challenge page. So with 3DS version 1, it was typically a static password that you had to set up with your bank, or was a one-time password that was sent to your cell phone. And now with 3DS version 2, the use of biometrics, so things like Face ID, thumbprint scan, and interestingly, as more and more customers and companies start to build out their technology, there'll be the capability for you as a consumer to actually take a picture of your forearm as part of vein recognition technology, which I think is really interesting. So the use of biometrics, similar to things like Apple Pay and Google Pay, where it's very easy to put your thumbprint on or do Face ID, that's going to be incorporated as part of the overall challenge process. And then there's also a number of other ways in which the challenge can be presented. So again, one-time password for that standard scenario where you simply just want to get your 6-digit code on your phone and enter it in that way. There'll also be a scenario where that's called out of band. So now as a consumer, you can get prompted with a page that says, hey, log into your bank account and validate that you are making this transaction. And so now you are going to your bank account, logging in with those credentials there and clicking a button that says, yes, it's me, I'm making this transaction. And so the other part in which 3DS2 really helps to try and facilitate that frictionless checkout experience through the use of risk-based authentication. So we're able to consume all of those 100 additional data points and pass that to the issuing bank, allow them to consume all of that data and make a much more well-informed risk-based decision as to whether or not they need to challenge the consumer or if they have enough information to proceed with the authentication process itself. And so lastly, Phil, to your point, making sure that you're communicating this new technology out to your consumers is going to be very important. When you look in Europe, 3DS has been heavily adopted and widely adopted amongst consumers there. So they're a lot more used to seeing that extra step at checkout, that extra page that says, hey, we need to verify and authenticate your identity. Whereas when you look in other regions, such as the United States and elsewhere, a lot of consumers aren't going to be familiar and comfortable with that additional step along the way. So it's just a way in which, as a merchant, making sure that you get out there and communicate that, hey, you might see this at checkout. Here's why we're doing it. Here's why it's of benefit to you. So on and so forth, I think is really important. And in our survey, we saw that 85% of our respondents said that they've communicated the use of 3DS on their webpage or their mobile application to their consumers solely to try and make sure that they could, really notify their cardholders in advance and offer that, really best-in-class customer experience.
Great, Jeremy. Thank you so much. And gentlemen, just to let you know, we've got about 5 minutes left in the session today, so we're going to have to wrap up fairly quickly. I'd like to turn it over to Gord at this stage. Gord, if you could give us a bit of a view as to how merchants can also establish performance optimization, if you will, to stand up to their own integrated data infrastructure, as well as just comment on the investment priorities for recovery, if that works for you.
On the merchant priorities?
Yes, please. And the investment priorities, that would be terrific.
Yeah. Again, merchants have to look at this as ways to further optimize their overall performance. We look at investing in these particular technologies, as Jeremy outlined earlier. We promote a layered approach to security in this particular aspect, that merchants should be using all of these tools that are available to them. And some of them come with a cost. So they need to be doing that business analysis, the business case analysis, to determine what are my losses that I'm avoiding here. And as Jeremy indicated, it's not simply the fraud losses, it goes way beyond that, as to your back office and operational costs. But all of that has to be integrated into a business case decision. Do I need to invest in these tools, in these products and services, and what's my return on it? And that's what we see in a lot of cases. The merchants in the card not present space aren't prepared in a lot of cases to deal with the fraud and the chargeback and dispute process that come through, and it has a huge impact on their business. They have to make some appropriate decisions, and I think 3DS is one of the areas that gives them that liability protection, but it comes at a cost.
Got it. Good stuff. So, gentlemen, in terms of the wrap up, because we do have a couple minutes left, Gord, any final thoughts that you'd have with regards to how Visa helps and protects its members?
Yeah, I think that prioritizing security will determine the success of a digital transformation efforts. Separating businesses that merely survive during this period from those that use it as a foundation for long-term growth and differentiation is going to be important.
Perfect. And Jeremy, over to you. Your thoughts about, from a Worldpay from FIS perspective. Again, we're quickly running out of some valuable time, but please, I'd like to hear your final thoughts as well.
Yeah, absolutely. So from the Worldpay side of things, so of course, being a global acquirer, so we are trying to really take that global presence and global approach to how we generate and develop new products and services to help our customers really deal with this uptick in fraud and uptick in different fraudulent scenarios. So trying to take input and intel and collateral from across the globe with the merchants that we do business with, and feeding that into how we develop those products is really important for us as well. And then the other thing I'll speak on really quickly too is that one of the big initiatives for Worldpay from FIS as well is the concept of a guaranteed payment, so to speak. So as Gord mentioned, all of these solutions, these tools, they come at a cost. And so for a merchant who wants to make sure that they're going to achieve a positive ROI on the implementation of these tools, they want to make sure that, hey, if something slips through the cracks, are we going to be covered from a financial liability perspective? And so we're working really hard on trying to develop a solution where we can offer just that type of indemnity to allow merchants not only to get the peace of mind that, they are going to be protected from the time of authorization, but also post-deposit as well.
Great. Well, gentlemen, on that note, Gord, thank you so much. We greatly appreciate our partner Visa Canada being with us here today. Jeremy, again, really appreciate your participation. Very informative, and again, I look forward to the reaction of our stakeholders who are watching this today. So, on behalf of Worldpay and Visa, we'd like to thank you so much, everybody, for joining us today, and we look forward to seeing you again very soon. Thank you.
Thank you.